Stream is recording, guys and girls. Hey, Kate.
Hey Nathan,
How are you?
good man. How are you?
I'm very good, thank you. Oh, oh, what's been going on?
Oh man, not much.
Not
How about you?
much.
How's travel gone?
Very good. It's very enjoyable. I'm in Chiang Mai at the moment.
Oh,
And just
vibe.
just kind of staying here and just working for the next month, and then I go to Malaysia, stay there for 10 days, and then take it back.
Fuck man, that's so cool.
Yeah, it's gonna be good fun, good vibes. But
Mm,
yeah, just kind of settling down a little bit at the moment. TBH.
yeah, yeah. I'm sure it's been kind of hectic with like
Oh,
hostels and stuff.
oh, it fucking has. Like at the
Yeah.
moment, I've got my own like place almost, so I'm kind of just
Oh,
staying,
nice.
yeah, like one spot for the next 30 days, setting myself insane a little bit. But no, it's been good. It's been good. Been to the islands and shit like that, and yeah, it's been a very eye-opening experience. Very different.
Yeah, totally. Yeah, the islands are so cool as well. Which ones did you go to?
Went to Koh Tao and Koh Phangan. Have you been before, Kate?
Yeah, kind of like in June. Yeah, I went to Thailand and visited. I don't know if you said Koh Phangan,
Yeah, yeah, Koh
but
Phangan.
yeah. It was so cool, man. That one was so cool. I loved how like remote that island was.
Oh, it's so nice. Just going like just from like we went around one of the days and we went exploring and stuff like that. Went like snorkeling and stuff like that. It was sick.
Mm, so cool.
Yeah, pretty nuts. What do you reckon, Nij? Oh, this is Najat, by the way.
Hey,
Hello, nice to meet you.
is there like a video situation going on that I'm not aware of, or is
Uh,
this just a voice thing?
Not currently. Hold on. I'll turn on the camera.
No, that's cool. That's cool. I just wasn't sure.
We'll share screens as well. Like we'll kind of give you guys a bit of stuff that we can kind of look at.
Sweet.
So essentially today we're gonna go over like a bit of the basics. I think we're just waiting on a few other people to kind of get in. But like a bit of the basics, just like how the market moves. Um, we'll, we'll we'll dabble into like a bit of like why it moves, who gains from the market, why um, what kind of I guess um 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 um, um
Markets there are. Everything like we need to know before hopping onto charts.
yeah,
Because we
essentially.
wanna we wanna get you guys on the charts by next week. Because we think that like it's pretty it's pretty quick. Once you pick up, what we're trading versus like what we're actually trying to do here, it doesn't take long to understand that side of things. And then from there we can introduce the charts and then we dive into like the technicals, which is where the fun begins. But you need to know what you're trading. You need to know why it moves, and all of that jazz.
Yeah, dope.
So yeah, we're gonna go over like just the I guess the fundamentals of the shit, and then also a little bit of technicals as well. So like what a candle is, why a candle moves, um, yeah, just like the overall basics. So then, like Nij just said, for next week we can start getting you guys set up for technicals and start looking at charts, reading charts, and having a bit of an idea of what's going on and how things are working.
Sweet.
Yeah, we're still like 5 minutes ish early. So have you guys done any I guess background at all in regards to trading or anything like that? Like what kind of background have you guys got?
So
Just out of
automatically
curiosity.
turn sensitivity. Okay.
Me? I'll go.
Yeah, yeah. Anyway,
Um,
anyone.
Yeah, no, I haven't really got anything. I've just done a bit of I bought some crypto and shit, kind of more so last year,
Yep.
and played around with that a bit, but and shares as well, but not trading, sort of just bought and sold them within 6 to 12 months sort of thing.
So what would you say?
Um,
You've got a bit of an understanding how markets move, but also what the basics of analysis and charting are, like the candlesticks and stuff like that. Do we?
Not really. I don't really know too much. I've sort of watched a few videos on it. I've watched a lot of do you know some of the crypto YouTubers and stuff?
Yeah, I know a few of them.
Jason Fazino guy.
The name does ring a bell.
Yeah.
I haven't been in crypto for a little while.
Yeah. I don't know. I've just I've kind of but I've never really watched the in-depth trading videos and that kind of thing. So yeah, I'm probably not that's why I wanted to learn heap more about it. So yeah.
Not easy, bro.
Yeah.
Okay, what about yourself? Do you know much about it?
Yeah, not really, to be honest. I read through your onboarding document, and that was
Yeah.
super interesting. But yeah, not yeah, I'm really not super versed on this kind of stuff. Probably the most I have is maths apps with Anna back in the day.
Back in the day.
But yeah, no, I'm just super open to learning. But yeah, not a heap of knowledge.
No, unreal. And how are you, Lukey?
Can you hear me? Yeah, I'm good, bro. I couldn't figure out how to connect my phone and shit.
No, you're right.
I'm just here to meet cute Italian guys.
You came to the right spot. All right. I think Uvesh is getting on as well. I don't know about anyone else. This might be it. TDH for the day. We'll just send it together. Just thinking, should we just start? And then whoever's late can just kind of jump in.
Yeah.
What do you reckon?
In the interest of time.
We have started a little bit early, so. But
Yeah, that's true.
but we can just send
We
it.
might as well crack on though. Yeah, plus Yuvash has a decent understanding of
He kind of knows
I
what's
think
going
what
on.
we'll go through.
And I think one of the girls, she's I don't know, she's had some prior commitments or something come up, so she's not coming through. All right, fuck it, we'll go. Send it.
By the way, just quickly, is mine are you getting bounce back on the voice at all? Do I need to mute or
No, you're right.
it's all good? Okay.
I think it might be Luke, to be honest.
Sorry.
You're right. So essentially, do you want to start or do you want me to start, Nidge?
You can start. I'll jump in, but we should share our screen. Share your screen.
Oh yeah, true. Got my handsome face cranking. Alright. So essentially, this is kind of what we're going to go through today. It's going to be a little bit dry, a little bit boring. Like the first one probably always will be, but we'll flick through charts and things like that as well, and we'll go through a bit of trading view as well. So essentially, this is going to be the platform that you guys are going to do a lot of analysis and stuff from. I'll clear this all out.
This will probably look very deceiving and very scary at first, but this will become everything you see on this screen will slowly become second nature to you.
Yeah, it looks like a lot of like Najat said, it looks like a lot of shit that's going on. and looks a bit daunting, I guess. But once you kind of learn how to read what's happening here and where the volume is, and where a good place is to buy and sell, and actually make positions, then the
Yeah.
whole process kind of it flushes itself out essentially. So yeah, this is essentially where you're going to look for your opportunities from. So you've got different markets here on the right. Um, Up here you've got your time. So you can go from a minute looking at what's happening minute by minute on this chart. So this is each candle represents a minute. To
I guess before we jump into charts and stuff, Nathan, we need to explain and get people up to speed on what we're looking at.
Okay,
If
true.
you get what I mean.
Yeah. All right.
So by day trading, first of all, day trading and investing, like you said, Lewis, you've dabbled in investing, which is, buying a stock or buying something for a long-term gain, right? So, for instance, buying Tesla. We all know that Tesla's ran by Elon. We know that the future of Tesla looks good. So in almost any circumstance, going long or buying Tesla stocks in the coming years, you know that it's going to provide a net gain, right? So you're going to be in profit in a few years as long as Tesla continues to operate the way they're doing, right? Where trading comes into it is instead of these long-term holds, although there is a style of trading, there's many different styles of trading which vary between time frames. Nathan and myself, we go for like shorter time frame trades. So you can sit in a trade for 1 minute to 1 hour to 1 day to a couple weeks, right? Although we tend to look at the 5 to 10 minutes. Maximum, we're in a trade for about 2 to 3 hours. And the reason for this is you don't want to, when you're in a trade, it means you're open to risk. It means you're risking your money. And the less time you're in a trade, the less risk you're taking, technically, right? And this in turn will also help your psychology, which is something that's really big on trading. Because what you guys will learn in the next 5 weeks is everything on the technical side you can be A1 in, meaning that you could be an absolute guru when it comes to technicals. And what I mean by technicals is, going on a chart, reading the chart, knowing where price should go, drawing your lines, whatever it may be. But if you do not have the sound psychology, in the sense that if you are looking at a chart and you see lots of different opportunities instead of your plan, which is something that we'll get into later as well, then you're not going to be good at this, in the sense that technicals can be learnt, but mastering your psychology, mastering when to take a trade, when to stop taking a trade, is the true, is the difficult part of this process.
Yeah. So essentially, like just building on what Najat said, like you've got a few key factors when you are looking at a trade. Obviously, you've got the position, but then you've got like a big one is the psychology of it. So once you've taken it, or even you're about to, it's like a big thing within this game. It's like you have to be quite headstrong when you're taking positions and stuff like that and playing with the market. Um, the market's never wrong in these types of
Mm-hmm.
in these conditions. It's more yourself. So accepting the points that you do lose, but like not taking that too much to um
Yeah,
yeah.
exactly. Like, to kind of add to Nathan's point is people look at day trading or trading as gambling, and you need to kind of put yourself in a position where you have a system like any business. And I like using the analogy of like a casino because it's gambling. So in the sense of as day trader, we want to almost be the casino. So we want to have our edge, which would be, our technical analysis or things that we know that the average Joe wouldn't know. and by using that edge, we want to execute on it. And it's a matter of the best trader out there is a robot. Why is that? It's because there's no human like interpretation involved. The robot sees things happen on a chart and it instantly knows whether to buy or sell. So if we can replicate what the robot can do, then that's how you win this game. Now,
Yeah.
why we have an edge is because although that human interpretation is not always the best, it does give us a bit more of an edge, i.e. the robot or a robot is limited to what you tell it to do. We know what we're telling the robot to do, and we can add a bit more of our understanding and interpretation to make sure that we're getting the A plus setups and we're getting those moves that are bound to work out.
Essentially, just building off what Najat's just said as well is like you wanna operate without emotion when you're kind of sitting looking at charts. Essentially, you wanna sit without an emotional bias, whether it's going to go up or going to go down. You don't want any emotions to essentially be involved, and that's the hardest part about trading. It's not the actual positions that you're taking and whether or not it follows your rules, because you can do that 100% of the time. But once, I guess, you lose one, which is going to be inevitable within this game, you're going to lose. But it's your systematic approach that essentially makes you win long term. But once you lose one, it's not revenge trading and trying to get into the next spot or thinking that it's still going to go in your position. So you make another position, but you double that position, you double down to try and make up for what you lost the last time. It's essentially you're okay with being wrong and you move on and build on that rather than just trying to mess with your own head and then you end up blowing your own account.
Exactly. So with that in mind, we could jump into like the real basic side of things now. We just want like it's so important to understand that side of it because it goes such a long way. And in trading, you will find that you will forever be learning. Like this is a skill, and it's a skill that we all know is uncapped in the sense that you could go from making $0 to $1 million in a month. Not saying like you're gonna do that, but it's possible. And it's one of the only skills out there that allows that to happen. But with that in turn, all the risk is on you. And when all the risk is on you, your psychology and your mental has to be up there.
Tip top, and you'll discover some shit about yourselves that you'll know that's there, but like you might not even know it's there. Like, holy shit, like I'm winning that much that I'm starting to get greedy, and then you'll get on a losing streak. It just things will happen where you're kind of like, yep, my psychology is not right, but my skills and my analysis was like right on the spot.
Exactly.
So yeah,
Nathan, jump to trading view. Let's go through the different types of markets and the different pairs that we can trade, so people can understand what we're actually trading, so what we're buying and what we're selling.
yep. So like maybe we ask the people what kind of markets they think they are. So Lewis has already said a few. Do you guys want to take over? Kate, Lewis, even Lukey or Yuvesh? What kind of markets? Because obviously you've got your like your commodities and your gold, but just to see where you guys are at, if you guys know a little bit more.
There's like also like the foreign currencies.
Mhm.
That whole market. I think that was called the Forex or something.
Yeah, Forex. So that's foreign exchange. So that's probably one of the big ones that I like to trade in. So same with the Najat.
Yeah.
So you essentially with the foreign exchange you probably get the most liquidity with that. So essentially liquidity essentially makes moves. So right here, my mouse is fucking dying on me.
Yeah, I guess like a good way of putting it is all these. So you guys see these like red and blue candlesticks. I mean, not red and blue, red and green candlesticks on the screen.
These big portions here are like high liquidity. So essentially,
Yeah. So in perspective, for this currency to move even like 10 cents would take billions and billions of dollars. And why that's important, right, is because us as retailers, even if we got 100 people all with like $100,000 and we decided to buy the euro against the dollar, we would barely move it. And what that means is that all of these markets are predominantly pushed and they're predominantly bought and sold by major institutions. So your big banks, your big reserves, your central banks, all of these guys are what can actually push the market and move the market essentially. So the aim of the game is to almost understand what the big players are doing, and as the small players, we're just jumping in and out. So we will never catch a move like end to end because it's not smart because you don't know what's going to happen. What we like to say is you want to always take your piece of the pie and you're happy with that.
Yeah. So
And
not get too greedy and just kind of jump in, jump out type of shit. Move with the big players. Don't move against.
So
so
I just had a quick question. So is liquidity the same as volume, or?
So liquidity and volume go hand in hand. Volume just means that there's a lot of transactions happening. So there's a lot of money going in and out of the market. So there needs to be volume for there to be liquidity. But when we say liquidity, we mean that if we want price to go up, so let's say price is trading at $50 and we are a big bank and we want price to get to $100, right? Instead of just buying at $50, what we will do is we will drive the price down to almost man-make liquidity. So by driving the price down, you're getting all these orders that are filled, and so you're getting your fill lower. It's very like technical because it sounds confusing at first, but when you start to see the charts move the way that they do, you'll see that when price is going in an uptrend, so when price is continuously going up, you'll notice it won't go up in like just one line. It will go up and then it'll come back down a little bit. It'll go up, it'll come back down a little bit. And what that's doing is every time it's retracing back, it's actually grabbing more liquidity to then push back up.
Yeah. So
So think of the market as go Nathan.
I was just gonna say, imagine it in a way that like you're running a marathon, but you got to take a few breaks here and there. So you got to slow down. It's like the pace of kind of going up and up type of shit. Like you gain your momentum, but then you need to pull back to gain you some breath and then keep pushing up. You know what I mean?
Yeah, so liquidity is really important, and both Nathan and we trade like a lot from liquidity in the sense that you don't want to enter a trade unless you see a run on liquidity, because then you know that the big players, i.e. the banks, have gone into the market, manipulated it, and they're in their positions. And then that's when we see gold and we're like, boom, let's get in and then let's get out. So yes, they go hand in hand, but volume and liquidity are somewhat a little bit different.
Yeah.
And
So
the best thing about volume is you want to trade when volume's high. So on the chart you can see at the bottom, if you just want to like go around it, Nathan, you can see like the volume bars. So the longer, essentially the taller the bar is, means the more volume there is. And you'll see in the top left, there's like this number next to the VAL. Yeah. So that is just indicating how much volume is in each individual candlestick.
yeah, so you can zoom in and then obviously see each one, and then there's a higher volume for obviously the bigger candles and the smaller volume for the smaller ones.
Exactly. And you might be asking, like, how can you tell when volume is going to be in the market? And that goes into the next point, right? So the different types of markets, we've talked about crypto, we've talked about commodities, which is your gold, your silver. We've talked about Forex, your foreign exchange, which is the euro, the GDP against JPY. As you can see on the right, pairs, you can trade pairs against different pairs. Nathan and I tend to trade against the US dollar the most. And this is just because different pairs will always move differently. So in the sense that it's almost a good rule of thumb for any new trader to kind of pick 3 pairs, and they're like your 3 pairs that you focus on. Because each pair will kind of move in a way specific to itself. So the more that you're familiar with that pair, i.e. the more you're on that chart looking at it, you'll be like, oh yeah, like I saw gold do this last week. It's going to do the same thing this week. Like I'm going to be an idiot if I don't get into it. In addition to that as well, different markets also operate on different times. So the crypto market runs 24/7, meaning that you can take a trade whenever and you can hold that trade to whenever. The forex market and the indices market. So your indices are like the S&P 500, the ASX 500, ASX 200.
They're
These
essentially top 500 companies of like a market. So
Yeah, do you
like,
have a heat map?
Mm-hmm.
You should show the heat map.
I don't think I have a heat map. What are you looking up?
Just search on TradingView. While he brings this up, so these markets, the indices and forex markets, operate in specific times. So they are 24/5, meaning that on the weekends there's no trading, which
Wait,
is
what?
good for us.
What are you talking about? Heat map?
Just search on Google TradingView heat map.
I don't know what this is. I feel like my computer's dying a little bit too, TBH. You guys there?
Yeah,
Yeah.
yeah.
Oh, okay, sick. Yeah. Oh yeah.
Go down. Yeah, so this is the Forex heat map. So it's nice when you open up your charts to open up something like this, because this just gives you an overall view of what's happening in the day, right? So you can see the US dollar, the second row, it's a lot of green, right? So it just means that the US dollar is bullish today, it's pumping today, right? So taking a sell on the dollar isn't wise. But this is just one of the many different things you can look at in terms of analysis. Why I wanted to bring this up was because I wanted you to show the SPX one, Nathan, so then they could see what's in SPX.
Sorry, man. Okay. SPX. Uh, you going FinViz?
No, not TradingView.
Stock heat map.
So this will essentially show you what the SPX is made out of. So what stocks make up the SPX, which is the top 500 stocks. Green means that they're trading in positive today, so they're going up. The gray is it's a gray area, meaning they could be a bearish day or a bullish day, meaning you could go up or down. And the red is obviously downtrending. So this is another like good thing to have open. Like I said before, with the forex. If you trade indices, it is pretty important to have this open because do you guys are aware of like financial statements and when businesses release their earnings. When businesses release their earnings, that tends to drive price up, which makes sense, right? Because if let's say Microsoft tomorrow shows that they made $10 billion, we're going to expect it to be green. And that's just and news is just another factor of volume as well. So volume comes in many different ways. Usually we look at session times. So when you trade any session, or sorry, when you trade any market, there's 3 major sessions. So you have your Asian session, which is us in Australia and Japan. which starts at 9:30 a.m. Adelaide time, and that goes through till about 4:30 p.m. Adelaide time. You'll see that the start of a session is usually the most volume in a session. Where the start doesn't have the most volume, it means that the market is waiting for news or waiting for some sort of catalyst before that volume is going to come in. So as you can see on Nathan's chart, you have three different colored squares, right? Your green, your orange, and your red. So your green indicates the start of Asian session.
No, the greens are still
Yep.
at London, so I haven't got Asian session on here just because not much happens during Asian. Sorry, guys.
Okay.
The greens where London starts. So essentially, this is last night's trades. But yeah, the greens where Asian start or London starts, but there wasn't much volume just because we knew that we were waiting for something to kind of happen. But then you get a big push up, and then generally during New York as well. So the overlaps when New York starts, the New York session as well. So obviously that's when like bigger institutions and stuff are coming into the market, and they're essentially pushing the price of things up or down with a lot more volume. Um, so yeah,
Exactly, because as an institution, as a major player, you can't trade the market at any time like us. You have specific windows you can trade, and those are usually the market opens. So you have Asian session, 9:30 a.m. You have London, which is on Nathan's screen, which is around 3:30 p.m. to 4:30 p.m. That's when you kind of want to be looking at the charts. And then you have New York session, which is around 10:30 p.m. at night. So it's in Australia, we have it really nice because we have all three sessions actually in our day. Whereas like if you're in the US, you could only probably trade the US session because London's like at 3 a.m. So it is nice for us that we can look at all three sessions. I don't know about Nathan per se, but for me myself, I try to only trade one or two sessions. I like New York session the most. You'll see that whatever pair you decide to go with. So I trade mainly gold. Gold usually tends to move the most during New York session, right? So I'm not going to waste my time sitting behind the charts 8 to 10 hours a day, where I can just jump on around like 9:30, 10 p.m. Do my analysis, and then by 11 p.m. I'm in a trade or I'm not in a trade.
so yeah, you essentially
And what
see
this
how much volume is kind of entering the market when these sessions kind of do begin. Here there was a lot. Right here during New York there was a lot. This one here is um, this is gold as well. So yeah, it generally moves a lot more once you get to these sorts of sessions. During Asian, it kind of sits, it goes sideways, but then you essentially want something that's going to be moving up and down quite consistently in a nicer
Yeah.
fashion.
And of course, guys, if we are going too fast, or if there's something that you're not sure on, just tell us, like scream at us, because we're going through this in like a very informal way,
Yeah.
and it's essential that you understand like this part because then it's just charting after this.
Yeah, just stop us at any point as well, guys. If you're not sure on anything, just give me one sec.
Yeah, just yell out. So that's the different types of markets. We've talked about the sessions. So you have your three sessions.
Sorry. Yeah. So yeah, essentially, yeah, you've got your crypto, you've got your indices, and you've got your stocks and your forex kind of markets. Um, essentially, like Najat's kind of pressed on again, I'm just going to kind of go over it a little bit more. You want to be looking at two to three, two to three charts at maximum. Like you don't want to confuse yourself too much, and each chart has its own real personality. So essentially, the charts that you're going to be looking at, it's going to be a mixture of emotions plotted on a chart essentially. So any chart this is going to be a mixture of institutions, retail traders, retail traders, just like essentially just people making decisions on where they think that things are going to go and trading with that.
Yeah, exactly. I guess you got to always remember that for you to make money in this game, it means that you're taking it off someone else.
Mm.
So someone else has had the opposite idea of you, and you're taking their money essentially. There's nothing else that drives price other than that, right? And that's why we want to be on the side of the big players, because the big players look at retail investors like us as their liquidity. So now that we know what the markets are, we know what a couple pairs are. We can go into the different types of positions.
Does that kind of make sense, though, guys, on how things move, or how the markets move and things like that? I don't know if we can't rush through it.
Yeah.
Ladies and gentlemen. Okay.
So I guess now we go into what we do to capitalize, right? So we buy or we sell. They're pretty much the two only things we can do, right? And in trading terms, a long is a buy and a short is a sell. And what we mean, so a lot of people don't understand that you can buy and sell stocks. People think that you can kind of just buy. But what we mean by selling is, let's say we think on Nathan's chart right now that the euro is going to drop. So by selling it, we're pretty much saying that we're going to sell it at this price. So $1.0971. And we are going to close our position or rebuy it at a lower price. So then our net gain is the difference. So it's the same as buying it. It's just the opposite. But the mechanics are the same in the sense that whatever the price difference is what you're profiting.
Yeah.
And
So
this is good because a lot of people think like, oh, you can only make money when a market is, going up. But nah, like as a trader, we love a market that's falling. I mean, speaking for myself, I think like 80% of my trades have been shorts. So I'm a very short seller in the market. And you will see that statistically as well. Price tends to fall quicker than it goes up. Right? Price always likes to go back to where it's been, and price always starts at the bottom.
I'm just trying to add someone to the call as well.
Oh, someone's joining.
Yeah. Just give me 1 sec.
Does anyone have any questions? Well, Nathan's wasting all of our time.
Alright, I think she's just about to jump in. Okay. Yeah, do you guys have any questions or anything? Yes, she is.
Yeah, I have a quick question if that's all good.
Yeah.
Yeah.
I was just wondering, like, with the commodities and stuff, this
Mhm.
might sound really stupid, but like, how are you actually like buying and selling gold and silver? Like, obviously you don't actually physically have the gold and silver, so like, how does that side of it work?
So essentially, you're not gaining anything physical, like clearly, but you're working off the price change of the actual commodity itself. So with gold, gold is like an inverse to actual US US dollar was the going currency at that time. So obviously US dollar is the global currency now. So gold is essentially inverse anything the US dollar is doing. So this right here, this is a chart of how well the US dollar is actually performing. And at the moment, it's in a bit of an uptrend, but I don't think that's going to last very long, TBH. Gold is, since that's in an uptrend, gold's obviously, that's not a fantastic example, but yeah, it's going down itself. So this is on the hourly. This little spot here, it's kind of pushing down instead of pushing up like USD is kind of doing. So yeah, you're
I guess in a macro perspective, meaning why it moves kind of opposite is because when the economy sees a recession or when they see that the US dollar's falling, all the major players or honestly just the general population will start to think about how can we hedge against inflation. And you want to hedge by buying things like Bitcoin or buying things like gold, right? Because we know the US is slowly crumbling. So holding money in savings means that we're just going to lose it in the long run. But that is a good question because when I first started buying gold, I was like, so do I get gold or do...
But
It
yeah,
is a great question.
yeah. So yeah, essentially you're just looking at the price movement. So you could trade gold, silver. Gold just moves probably the fastest out of all the commodities.
Yeah.
Just hence why we kind of buy and sell that. But yeah, it's essentially same concept for everything. Like no matter what you do trade, it's just going to be the same kind of thing. Like you're trying to make money on just the way that the price does change. So essentially trying to predict the future. So whether it's going to go up or down, no one knows, but you can have the best idea at it. Just using your own technicals and just having a crack at seeing where it goes and make some money in the meantime.
Sweet.
Yeah, and I guess an important thing to touch on as well about gold is gold will tend to move in all the sessions because it's gold, right? It's not locked to a certain economy. Whereas, if you're trading the Australian dollar versus the US dollar, then you're going to expect that to move during Asian session and then the New York session, right? Versus if you're trading the pound, you wouldn't expect much of the pound in the Asian session. But like I said before, you can trade pairs against different things. So you could trade, I'll keep it simple. You could trade the British pound against the US dollar, or you could trade it against the Japanese yen, right? And although you're trading the British pound, both of those pairs will move slightly different in both sessions because there's more volume to drive the British pound against the Japanese yen during Asian versus the volume during New York session. So it is really important. You guys will probably jump between lots of different pairs at first. What worked for me the best was literally that. Like I chose I think 5 to 6 pairs at the start, and I was just looking at them and seeing which one I liked the most. And then from which ones you like the most, you really focus on 1 to 3 of them. Honestly, I know many traders that trade just one pair and they make millions of dollars off of just trading one pair because their sole focus is on that pair and only that pair.
Like there is a few big ones like Donbo and things like that, where they just sit on gold literally and just wait for one thing to happen and then make the move and then that's it. They're kind of done for the day.
And what were you guys looking for when you decided what pairs you were gonna trade?
So you wanna first ask yourself what session do you think you will trade them, what session suits you the most. So are you a night owl? Because then it's probably the New York session. Do you want to trade the Arvo? Because then it's the London session. Or do you want to trade in the morning? Then it's the Asian session. And then from there, you look at which pairs move the most during those sessions, and those would be like your obvious picks, right?
Yeah, I feel like from what you were saying, Mitch, like you would look at where you're getting the most moves from, because different pairs they've got different volumes in the market. So this is Euro USD, and you're getting some pretty decent big moves from the candles and stuff like that. This is on the hourly. Where if you go to something a bit smaller, maybe GJ, GJ is still pretty significant. You can get smaller pairs that move a lot slower. So maybe if you're less risk adverse and you don't want to risk as much, different pairs might move a little bit slower, like something like this. You can get a long-term trend, so that's over 3 days. It kind of took its time to go down. You can hold your trades for maybe a few days rather than get in and out within an hour or a few minutes type of thing. Just depends on what your style of trading is and what you I guess are most comfortable with.
Yeah, and like another, it's a good question, Lewis, because there's a lot that comes into it as well. Because certain pairs will have something we call like commissions or spreads. So the major pairs, which would be your euro, your US dollar, your British pound, your Japanese yen, these pairs tend to have the lowest commissions and lowest spreads, meaning that when we're actually buying or selling a stock, we're going through a broker. So the broker has to make a profit out of us buying or selling. And a less popular pair, i.e. a pair that has less volume, has greater commissions, which means that if we entered into a buy, we're instantly chasing a certain percentage depending on how much we bought, if that makes sense.
Yeah.
There's rarely ever a situation where you will like press buy or sell and you'll instantly be in profit.
Yeah, so
So there,
kind of what
go
Najat's
on, Nathan.
saying is you might essentially want to sell here where this order's being filled at, but you might get only filled like down here. So you're essentially in a loss before you've even started the trade. Kind of spreads and your spreads essentially, it's something you've got to make up for before you've actually put yourself into profit too.
Yeah. What I would recommend, and I'm sure Nathan's the same, is to look at gold, look at the euro against the US dollar, look at the pound against the Japanese yen. Those 3 pairs will give you enough volume throughout the entire day. And pairs will kind of move, in a technical aspect, a lot cleaner than other pairs.
Yeah, they're probably the nicest 3, to be honest.
And they have the lowest commissions.
Yeah, that we trade as well. So Najat normally trades gold. I'm more on Euro USD. So like anything we kind of trade together, as well as we're essentially going to try and make go live almost nightly as well, just to kind of keep the consistency with the trading going. So you guys are more than welcome to come watch live.
Like every night?
But yeah, we're trading like euro and gold. Sometimes GJ or the British pound against the Japanese dollar or Japanese yen. But yeah, just normally those 2.
Are those also the other thing is like with those say more popular ones,
Yep.
is it harder to trade those because maybe like smarter people are in them and they're the ones like trying to make the money, or is that like a factor? Or
I think they just move a lot quicker. So essentially, when we're trading, like for myself, I'll look for opportunities on a like an hourly time frame, but then I'll kind of zoom in to like a 5-minute, and you can just get a lot bigger moves a lot quicker in something with a lot more volume within the market. So that these bigger, I guess these bigger pairs, they've got a lot more volume within the market, so they'll move a lot quicker, especially when we do enter like something like the New York session or the London session as well. So if you're wrong, it can go against you pretty quick. With something like a bigger pair, not to say that you shouldn't trade them. Yeah, they move a bit quicker than other pairs. Some pairs will move a bit slower, time to get to where you want to go. It just depends on how you like to trade and how risk adverse you kind of want to be as well.
And is that right that you want to do the like be in the market when it's moving the most, because in that case you can make more money like faster, essentially?
100%, bro. So essentially, you want to be in and out.
It goes the other way as well, doesn't it?
Exactly right. So
Yeah.
Yeah, you want to be, I guess, in and out kind of as quick as possible, but you want enough volume where you can actually hit your targets too.
Yeah.
You don't want something that's going to continue to go sideways, or maybe have a gradual up, or maybe a small down type of thing. You want something that's going to push up and hit your targets without you kind of really needing to worry too much.
Yeah, because that's what like Ninja said at the start, wasn't it? About like you want to be kind of in and out quickly and stuff.
Yeah, exactly right, man. And like the only problem with something with more volume, obviously, if you got something like this, so if you entered, I don't know, you entered off the bottom of this, not saying you would, but with more volume, you can get your stops triggered quicker. But that's probably the only risk that you have with being in a more volume kind of base market. But we'll get a bit more into that as the time goes on, because you can change the volume, you can change the timing that you're looking at. Well, you can't change the volume, but you can change the times that you're looking at, and then change your risk to reward ratios as well. So you can only risk what you're kind of willing to lose and things like that as well. So you can give yourself a statistical advantage over the market with where you obviously place your positions, but also the nitty gritty when it comes to your positions, how big your stops are, what time frames you're looking to take a trade on, what market obviously as well, and then right down to the end that would come into how's your psychology looking, and yeah, how confident you are in your own trade.
Yeah, and I think like to add on to that, and for you as well, Lewis, when you start to, so eventually we'll get you guys to all write your own trading plans, right? And what a trading plan essentially is it's like a tutorial of what positions you're going to take. So literally you're going to have it step by step. So, you know, you could have step one as I open trading view, but you don't have to get that granular. But we have...
Should we go over why a trading plan is so important, first off?
Yeah.
Why you actually need it?
Well, quick answer to that is if without a plan, you're gambling.
Pretty much. So
Right? Without a plan, without something set in motion, you're gambling.
You want to know exactly what you're looking for when you come to the markets.
Yeah, and what I was going to say was once you have your plan in place, so let's say like you have 3 things that you look for before you execute a trade. What you then do is you don't just jump on the charts and start executing trades when you see those 3 things. You do something what we call backtesting. So you look at historical price data, right? And you can do that by just like on the chart, you just scroll to the left, right? And you can see where price was yesterday. You can see where price was a year ago. And all of that is value because let's say our trading plan is 3 steps and we started trading last year. We have 1 year of data that we can look at. So in that 1 year, if we want to apply our trading plan to gold, we can actually see how profitable we would have been in that 1 year. If that profitable wasn't good, like if we were not profitable, then you know something's wrong with your trading plan or there's something wrong with your execution of that trading plan. Right? And you'll also find that, I mean, I did this not too long ago, was I tested my strategy against like 4 different pairs. And of those 4 pairs, 2 of them were just not profitable at all. Whereas the other 2 were extremely profitable. and it just shows that each pair will tend to move differently. So depending on your strategy and the way you like to trade, certain pairs will move with you that way. And the best part about it is the fact that there's so much data, historic data, is that that's what kind of gives you your edge, because you're looking at it in a perspective of, well, what's the evidence? What's the facts? You know, is this strategy factually correct? Or am I just in this fairy tale trying to like roll the dice, flip a coin, and press buy or sell?
Just looking at Euro, there's a nice setup taking place. Yeah, so essentially, just touching on what Najat said with the backtesting as well. This platform here, it gives you like a lot of tools that you can use to your advantage to kind of just to take, I guess, take your learning to, I guess, the next level. You can do quite a few things with this application itself. So you can do something called, you can get a demo account on this and actually trade real stocks with fake money. So you can kind of click down here and then just to show you guys. It's gone. Okay.
And yeah, so when you guys first open TradingView, you will definitely be overwhelmed.
Yeah,
But that's like
there's a
the
few
beauty of having both Nathan and I is like, you know, because we will be in the Discord every day for at least an hour streaming. So you can jump in, share your screen. We can help you navigate through like how to kind of just be comfortable with TradingView, because this is almost your source of truth.
Oh,
And you want to know what it can do and what it can't do and use it to your advantage.
yeah, so essentially you can practice your strategies in here by paper trading. So paper trading is essentially trading fake money. And then like Najat was saying, you can go back and backtest. So you can legitimately go, I don't know, go a few weeks back, crop that there, and now you don't really know what's come after. So you can test your strategy. Say this is where you would maybe take a sell, put a sell there, and then watch as things kind of progress.
I don't know about everyone else, but this is in like 144p for me.
Is it? Is it proper shit?
It
Is that
does
better?
not look good.
Dude, my internet's my computer's like proper dying. It's giving me.
Yeah, it's because you have 500,000 tabs open.
Dude, that's there's another window too. A few things going on. But yeah, you can go back, you can back test and see actually how your strategy performs against the market. Obviously, this is getting a bit ahead of ourselves, but once you guys, by the end of the 5 weeks, we want you guys to a point where firstly you're going to understand what's going on with the markets, actually how the charts are properly moving, and how to make proper informed decisions on whether or not things are going to go up, things are going to go down, or things are going to go sideways. We want to help you by the end of this 5 weeks as well to just build like a solid trading plan that you guys can kind of build on to as well as you go along. But yeah, essentially we're here to help. Yeah, we're doing this, I guess, out of the kindness of our own hearts because we're just angels. But like just to help you guys kind of get ahead and learn stocks, learn trading. Because honestly, it is very. Once you kind of get into it, it's pretty fun. You definitely get addicted a little bit, I must say. Especially
Yeah.
a risky kind of side to you that you like to kind of see things kind of play out. As well, once like the real money kind of gets involved, that's when it starts to get even more kind of fun. Like you have some crazy ups and downs playing this game, I promise. But yeah,
Yeah, the first couple months you'll be addicted to the charts, nevertheless.
yeah,
And that's a good thing and a bad thing, right? Because it's a bad thing because when you're looking at the charts 10 hours a day, you're seeing 100 different opportunities play out in front of your eyes, and that's not good for you. That's never good because you never want to risk too much, and you never want to take too many trades. A lot of people have different rules when it comes to, you know, how many trades they take, how much percentage they risk. This is something that we'll get into later because I don't want to dive into like position sizing and stuff like that because it would just confuse you guys now. But this will all kind of make sense. But in essence, a good trader tries to take 1 to 3 trades a day. You know, when you lose 1 or 2 trades, that's kind of when you call it a day there. You don't want to chase your losses because that is just a recipe for a bad mindset and disastrous.
yeah. There's a few little psychological things that you got to consider when actually taking the trades. Like Najat just mentioned a few of them. But yeah, there's once you actually start like playing with the money a little bit, then you start seeing that, oh shit, this is where my downfall is. Like with myself personally, I very much enjoy to revenge trade. So when I'm wrong, I'll say I go along here, I'll go for a buy, I don't know, here, and then hits my stop. Then I might be like, oh look, it's at another level, still gonna go in the same direction, so I might jump in and then do another buy type of thing. So like, there's a few things that you can kind of where this game does get hard. They do say that around 70 to 80% of people fail when it does come to trading, but that's just because the psychological aspect of trading. A lot of people
I think
don't.
it's even higher than that, man. I think the percentage is even higher than that. But like, you have to always remember, like we said at the start, this is like an uncapped skill. So it's like, think about how many people become doctors. It's probably the same fucking percent, right? Because it's so hard to master it. Of course, it's different to being a doctor, but that percentage, just trying to give you guys some contrast.
The crazy thing is as well that the technical analysis side is really not that hard. Like honestly, I think within 3 weeks' time, you guys are honestly going to be able to mark up charts with us and know what the fuck's going on. If obviously if this is what you kind of want to do, but it's really not that hard. Like the technicals, how long did it take you to really learn the technical sides? Just out of curiosity.
Yeah, I wouldn't say long. I would say, honestly, like, if you're overloading your brain or if you're, you know, putting in time every day, you'll be able to learn the technical side in 2 weeks. And in a week,
You can learn it in
you'll
a
be able to
week.
you'll be able to draw simple support and resistance. And for a lot of traders out there, support and resistance is bread and butter. It's all people use. We
Honestly, all
dive
you
in a
need.
bit deeper because we have like a refined entry, which is something that we'll get into later. But I think that we should jump into like some market structure, Nathan.
What now?
Yeah.
Should we go over
Unless is it
candle first?
a candle?
Yeah.
Yeah, we can go through a candle.
All right. All right, guys. Fuck it. Here's your first TA lesson. So a candle is essentially a candle and your time frames go hand in hand essentially. So right up here on TradingView, you've got your time frames. So you got your 1 minute, you got your 5 minute, you got your 15. It goes all the way up to monthly.
Nathan, let me stream, man. Your stream is way it
Is
looks
it?
horrible. I don't know if it's for everyone else.
Is it because I'm streaming my screen as well as my
It's
fucking
like nice at times, and then it just goes real choppy.
dude? When in
Every time
time?
you make a post, it just goes blurry. I don't
Yeah,
get it.
it goes very blurry. Let
Oh, does
me.
it? Hold
I'll
on. All
take
right.
over.
Out of 5 for me, but yeah.
It's the Thai internet fucking services, man. Didn't pay their bill.
So I guess this is like the other fun part of it is like you'll see even Nathan's chart versus my chart looks very different.
Yeah,
And that's like
everyone will do it their own way. That's what's fun about this. Like everyone's gonna have a tailored experience to themselves.
yeah, exactly. So you can see on my chart instead of having like squares, I have my sessions lined up here. So you can see you have your Asian session here, which is everything within this orange line. You have your London session over here, which is everything between this green line, and you have your New York session, which starts where New York says, so right around here. So for a candlestick, so all of these little things that you see are candlesticks. Does anyone know how a candlestick works?
I do.
Go on, Nathan, explain. So let's
Um,
look at which one's a good one. Let's find one with a wick on both sides. Yeah.
just go those top ones, yeah. I was looking at the ones at the top of the range at New York. They've got
Yeah.
wicks on both ends. Um, so yeah, I don't know what your colors are. I'm assuming blue's bullish. So
Yeah. Well, what does this look like, man?
it's,
So
um,
I guess for everyone else, I changed my colors. So usually green would be up and red would be down. I changed mine purely for psychology. We often look at green as buy is good, green is good, and we look at red as bad, which is like a no-no. And because we take buys and sells, you don't want it's something very minute, but it has helped me, and I just like it because I think the chart looks nicer and it looks cleaner.
you don't want to bias at the end of the day when you're looking for shit. So
Yeah,
with
exactly.
the candles are essentially built up of your wicks and your bodies. So with these candles here, do you want to draw one just as like with the rectangle tool?
Yeah, I'm trying to figure out how I can draw it nice.
Just go two
'Cause,
rectangles. Oh wait, yeah, yours goes all
yeah,
the way to the end.
I have it extend. Sorry, you can keep explaining while I
Yeah,
figure it out.
so the body essentially that's the price that it will fill, and the wicks will be the highs and the lows of the time frame itself.
Yeah.
So
So
with this one here, man finishes his drawings. So you essentially want to look at it in a way that it's a bit of a strange concept, but like you almost want to look at that in a line sense. So
yeah,
the bottom of the body is where the candle itself opened, and then the top of the body is where the candle itself closed. So if Najat's on a 5 minute time frame, that essentially means that that whole candle represents 5 minutes. For the candle to open at the bottom and for it to be bullish, then it's gone. It's essentially gone sideways. It's gone up, then it's gone down, touched the lows, and then it's gone up to the highs, and then it's closed at that body. So the wicks are the highs and the lows, and the bodies are where it closes and opens. So
so
if it was going to be a negative or a bearish candle, then obviously it'd be the inverse. It would open at the top and then close at the bottom, and the candles same thing as well. So you essentially got to think of it as a story of what's being printed. Um, yeah, if you want to go niche.
yeah, so exactly what Nathan said, right? So the body will tell you the story of that time frame. So if we have a green candle or a bullish candle, it means that we've opened at the bottom here And within the 5 minutes, we've closed up here. So this is the final price of that 5 minutes. What the wicks mean is that within this 5 minute time frame, so within this 5 minute candle, price did come up here and price did come down here, but it rejected it. So it didn't close in these areas. It's still important because wicks will help you tell a story, in the sense that if you see a lot of wicks to the upside, like we see here, so you can see these candles here, right? We have a lot of wicks. And that just means that every time price came up to these levels, what did it do? It came straight back down. What does that show us? That there is more sellers in the market here than there are buyers. Because if there were more buyers, these wicks wouldn't be wicks and there would be candle closures and you would see price continue its way up.
So yeah, the wicks are, if not more important than the actual bodies themselves. And when you're actually looking for a position, you don't want to. You want to be in on a candle close. So you don't want to buy in when a candle's still printing. Just go to your 1 minute and go to the current candles.
Yeah, exactly.
Just to show how
I'll
they
show you
do.
guys. So this is a 1 minute time frame, and this is the current candle. Do you guys see how this candle is moving as we speak? This candle could come all the way up here, but it could just go all the way back down. Like we're seeing it now, right? It was moving up, and what's it doing now? It's moving all the way back down. On the right, you will see a little time frame here. So this indicates how much time's left before the candle closes. Boom. That 1 minute candle closed. When we first came here, it was a bullish candle. It was a candle that was looking to go up, and it closed bearish.
So yeah, essentially your candles will give you it'll give you an image depending on what time frame on where the actual stock or the price wants to go itself. The wick will essentially tell you where it doesn't really want to go or where it wants to fill, and where it's rejecting. So they're like just as important as each other, and you need one without the other. So like, don't enter on trades where it's still printing. You want to wait for a candle close because you might see something. It might be pushing up, and then you buy in, and then it just tanks, and you've bought in on a big wick up. Yeah, something like that kind of thing. Because the market can flip on you quite quickly, and then yeah, it's just a bit annoying type of thing.
Yeah, I guess we can even show what this looks like in a line sense.
Does that kind of
So
make
if we-
sense though? Like just candles and things like that.
Yeah, does everyone understand like how a candle prints? Like what a candle is showing you?
Everyone's got themselves muted, so it's just.
If silence means yes. So ask questions, guys. Ask questions.
Honestly, just pick our brains for shit.
Just a quick question. You said don't like enter a trade until you see like the full candle has like been made or whatever.
Mm-hmm.
But like if candles are like constantly developing like every minute, like what we can see every minute, how does that work? Like if you want to enter a trade where you can already see like a full candle, like how does that work?
So essentially,
yeah,
there's the time frames up there in the corner where Najat's just gone, and then they range from 1 minute to even 12 months per candle.
Yeah.
So
So what we mean by close, right, is I'll just quickly draw something out for you guys, right? So here we can see that price is trading in this range, right? Let's call this a range. So price is going up and down in this box, right? If we see price, so instead of trading within this box, is if we see price do something like this, right, and come out of this box, then we can look at this as a breakout. So this does get a little bit technical, but we can look at this as a breakout, meaning that we've exited the range, and now we can look to the upside, right, which means buys. But when we say we want to see candles printed, is because you could see something like this, right? Where you get a candle here. Let's just pretend that this all looks nice. But do you guys all see this candle here?
Mm-hmm.
So this candle might come all the way up here, but instead of closing up there, it might close back in the range, and it might create a wick, right? And what this wick means is that we are still in this range because the body of the candle has closed back in the range. And we've come up here to test this level, but we've rejected it hard. So until we see the body close above, so if we see the next candle do something like this, where it closes above, then we can say, okay, we've broken out of this range, now we can take a buy. Yeah, so a lot of the times, right, like even it would happen to me a lot of the times, I'll see this candle start to print and I'll start to see it come out of this box and I'll be like, shit, I need to get in before it goes without me. And then let's say I enter a buy up here and then it comes straight back down. And a lot of the times you'll see, so we said that institutions, right, are the big players in the markets. So they will do things to make you believe one thing, if that makes sense. Without it getting too confusing, they will manipulate price to make the retailer think it's going to go one way before making you go into the market to then just lose.
So does that make sense, Kate?
Yeah, it does. Yeah.
It will
so,
make a lot more sense with when we combine the strategy and technicals, but it is a good question.
Yeah, sweet.
What were you going to say? Sorry, I cut you off.
Well, like when you are like trading like in the moment, you're trading at the current trend of the candle, right?
Yeah, like you're trading as the candle's printing.
Yeah, right. Yeah. So like obviously like you can't retrospectively trade or or in the future or anything. You're trading as the candle
Candle's
is like being printed in the moment.
Yeah, exactly.
Yeah,
But
right.
what we can use to our advantage, and this is jumping a little bit, right, is we know that price is trading in this box, right? What can we do? We can look back in time. So we can go back, and all this is data. So you're at today's date. This is back where we at now. We're at last Friday, 28th of July. And this is where price was back in this range, right? You can see here, price closes above this range. What does it do? It goes up. So you can look at past candlesticks and past price action to kind of formulate and predict where price is going to go. It's not 100% going to happen, but it's a little bit more of an edge in your favor, if that makes sense.
Yeah, essentially.
And this is another example of a candle that wicks up and then it comes straight back down.
Perfect example, man.
Yeah.
I like it. But essentially, when you're trading, you want as many confluences as possible. And like I get with the printing thing, Kate, that it might be printing on, I guess, one time frame. So everything on Najat's screen at the moment is he's looking at everything on a 5 minute time frame. But you might do a bit of like multi-time analysis. So you might go from a 1 hour to a 5 minute. And then you wait for the 5 minute close, but everything might be going up for 1 hour and everything's kind of lining up as you like it. So you're like, fuck it, I'm going to get in. I'll wait for this 5 minute candle to close. And then obviously once it closes, then it's reprinting another candle again. So you essentially,
Exactly.
every 1 minute, it's a bit quicker, but yeah, you got your 5 minute, your 15 minute. You've got smaller increments where you can get in and get out and wait for those closes.
Yeah, like to add on to Nathan's point, there is the bigger the time frame, the more likely that time frame is going to play out.
Yeah.
So when you look at a 1 minute chart, because there's so many candles printing, in the sense that these 5 candles here, right, represent one candle. So while on a 5-minute chart, we only have this one candle print. On the 1-minute chart, we have 5 pieces of information that could potentially sway you into taking a position. So what a lot of people do, and what both Nathan and I do, is when we first hop on the charts, we'll always go to a bigger time frame, whether it's the weekly, the daily, the 4-hour, or the 1-hour, right? And this will kind of give us our bias. So on a 4-hour chart, 4 hours are golden. Like, a lot of people trade 4-hour charts, and they tend to play out the best. But we're not the people that are sitting in trades for 4 hours, right?
Yeah, it takes too long.
So it takes too long for us, right? We want that dopamine, we want that hit, we want that 10-20 minutes of a trade, right? So we look at a 4-hour chart, and this might this is jumping a little ahead, right? But we can see that on a 4-hour time frame, we're going down. So price is making its way down, right? But if you go to a different time frame, so let's now jump to a 5-minute time frame, we can see that price looks like it's not as heavily downtrending as it was on a 4-hour. But it just gives us a reason that on the 4-hour time frame, taking a buy doesn't seem very logical right now. So we drop down to a lower time frame, and we kind of get into the details of the 4-hour candles, if that makes sense. So each time frame will tell a story, but always remember that the bigger time frames are more likely to play out than the smaller time frames.
Yeah, so essentially that's why, like I said earlier, that you can use your time frames as a way to trade. So people that are a bit less risk averse, they essentially might trade on a bigger time frame, so maybe a 4-hour or an hourly, just because the charts themselves will move a lot slower. So if you want to do things like hedging, or you're wanting to change your stops, or just change anything in the trade, you've got so much more time to do it. Where rather than on a 5-minute, you might have 10, 15 minutes to actually to change something within your trade to try and make things go the opposite way, or I don't know. If your stop's going to get hit, it's going to get hit a lot quicker on something like a 5-minute chart than an hourly chart. So yeah, it's a little bit of a.
But can you like?
What's that?
Oh, I was gonna ask, like, are you making more money on like a smaller time frame chart? Like, is it's a higher risk, but is it higher reward?
Look, you'll probably be making
Not
the
necessarily.
same.
Yeah.
So essentially, you want to look at your trading. You don't go off actually the profit, but you go off the risk. So you trade off risk rather than reward. It's a bit backwards, but you go off factors of R. So say for example that you're only wanting to, I guess, trade. You're only wanting to lose maybe $1,000 or $100 at a time, essentially. But your risk to reward is 2.5. You essentially you're going for $250 profit. Whether that takes you 2 weeks or it takes you 15 minutes, you're kind of essentially going for that same risk to reward ratio with the same kind of trade. It just depends on if you want to hit that quicker with more risk, or you want to wait and just let it run out with less risk. It's going to take a lot longer.
Yeah. Cool.
So this is kind of like what we say is you're wanting your statistical advantage over the market. So you're almost wanting to trade like a robot, stay emotionless but like risky at the same time. It's these different factors that kind of cause people to fail within this game. So like if you're only risking say 1% of your account, then if you I don't know, go against your own rules, and you say, "Oh, I lost 1%. Now I'm going to go for 2% and try and make that back plus more." that's when problems and stuff like that start arising.
Mm.
Yeah, and I guess also Kate, to add to that, when you trade, so if we look at like a bigger time frame, because these candles print, so we're on a 1 hour at the moment, because this candle will print over a 1 hour time frame, you don't know exactly what this 1 hour is telling you in a story way, if that makes sense. So by going on a smaller time frame, you're just getting like the most precise entry. So on a 1 hour, we could say, yep, this looks like we want to sell it. So we could just enter a sell right now, right? And we're using the 1 hour as our main time frame for the trade, right? What we'll do though is, although yes, the 1 hour is telling us to sell, we will drop down to a smaller time frame, and we will see what this 1 hour candle is doing so far, right? So if we know that a market wants to move like this, if we know that in a downtrend a market moves like this, so this could represent an hour, right? Instead of jumping in on an hour, if we go to like a 1 minute time frame, we can see the market moving like this within that hour. So we could enter on a pullback like this. So we could enter somewhere like here and have it like this, instead of just entering off of the hourly, which we could enter down here or over here, if that makes sense. So it gives you a lot more precision, and it
Yeah.
lets you understand what the candle is actually telling you.
Yeah.
I feel like we've given a bit of a mind overload to you guys. Like how's it all seem? Like how's it feeling? Does it seem a bit full on? The charting and
I think I sort of get it.
like that? Not too bad.
No, I think I sort of get it. Yes, yeah, no, it's not too bad.
Solid
Yeah, the
choice.
pieces will come together. The pieces will come together.
Honestly,
I guess another visual is, sorry to interrupt, but if we like just to show you guys what this would look like in a line chart. So this is probably how a lot of different people would see it, and you can see like you can tell where price is rejected by these points, like up here and over here. You can see where price is rejecting, right? But just from our explanation of candlesticks and the difference, the candlestick tells such a bigger and better story.
just more detail.
Yeah, a lot more detailed. So we can see that those points still exist, but now we can see like, oh shit, like it really rejected it. Or you can see like here, like there's not too many wicks, so it didn't reject it as bad as it did up here.
Yeah. Like, yeah, I feel like with you guys at the moment, it's a bit like, fuck, there's a few things going on, but like, honestly, in the next few weeks, you guys are gonna know how to read this shit. It's gonna sound like a book, but it's probably not gonna be that easy, but you'll have quite a good basic understanding of how market structure works, how to look for good entries,
Yeah.
where support and resistance and stuff like that is. It's gonna be
Honestly,
fun.
we have 10 more minutes before it's an hour and a half, so I don't want to keep you guys longer than that because no one wants to really be like learning for that long. But we will take you through. I want to take you guys through market structure because it's very essential. And what we mean by market structure is pretty much what price is telling us. So I'll go to a blank canvas, right?
Wait, no,
If we see,
hold on. What do you guys think, as in with the market structure? Like, how would the market move in just your opinion? Just to get a bit of not feedback, but a bit of audience feedback. Like, how do you guys think the market moves? Promise it's not a trick question.
Supply and demand.
supply and demand, boom.
Supply and demand. This is true. Even simpler than that, Louis.
Of course, the economics student would say supply and demand.
Like just going purely off what you see in the chart, just the jazz chart right now.
Momentum.
Momentum close. I liking the train of thought. Yeah, that you speaking as well. I can't really hear you.
Nah.
Caleb?
Oh wait, me.
Yeah, I was just seeing if you were speaking.
Oh, true. I thought my mic was not working.
No, it sounds like it's working pretty well, man.
Oh, true. What's up?
How you doing, brother?
I'm good.
That's good. Oh yeah, so quickly, what do you guys think? Just market moves. From what you see, what's it doing? I promise the simple answer is the best one.
It's tough. It's honestly tough. It's tough to put it into words.
Once like the jet says it, you're gonna be like, fuck, I knew it. Do you just want to go, man? Send it.
Well, how are you gonna explain it? Because I feel like I was gonna explain it a different way, so you can explain it.
Bro, I was just gonna say, like the market, you gotta look at it. Just simplify the fuck out of it. Honestly, this is my advice to you guys. Simplify as much as you can. So, essentially, in an uptrend, you've got higher highs, higher lows, and then higher highs. So that's what builds an uptrend. If you're going to have a reverse of structure, you want to see that break of structure. Um, but yeah, that's an uptrend. Your higher highs followed by your higher lows, followed by your higher highs. That just signifies that,
Yeah.
yep, we're going up. We're going to keep going up. We've got strength. And we're down.
You guys get what we mean by that as well. So like, pretend. Of course, it's a line graph, so it is a bit annoying. But let's say price is here. Let's say we've been trading sideways for a bit, so we're going like this. So when you look at something like this, you can tell that price is not decided if it wants to go up or down. So we don't know what supply or demand is dictating right now. We know price will eventually go in one direction, and to determine that is exactly what this is, right? So once price starts to put higher highs, and by higher highs we mean if we look at if this is where price was before and these are all the highs, now we've broken it. So price has gone past these highs and it's created a higher high. If these are our lows, what has price done up here? We've made a higher low, sorry, right? And it continues. Boom, boom, continues. And this is how you can tell that we're in a bullish trend, meaning that price is continuing to push up.
Or just an uptrend.
Right.
So
Or an uptrend.
there's the three stages of the market. So you've got your uptrends, you've got a downtrends, and you've got your consolidations. So generally, you're gonna get this on every time frame. Doesn't matter where you look, and you're gonna be going sideways. Honestly, 80% of the time. Like you're going to essentially be waiting for this big move up or big move down. Um, yeah, but you're going to be going sideways 80% of the time. My advice to you guys would be don't trade consolidations because they suck.
Mhm.
Honestly, you don't know where price is going to go. It's going to go sideways, so it's going up, down, fucking left, right, fucking backwards. It's just doing whatever the fuck it wants. You essentially want to trade where it's going in a clear direction. When you've got a directional bias, you trade with the trend. When you're swimming down a water, you don't want to be swimming against the stream. You want to be going with it. So path of
Exactly. Like
least resistance, essentially.
when you guys look at this, right? It seems really simple, right? Like, oh, if we're making higher lows, we want to take a buy here. So let's enter the market. And what do we know? We're making profit. We're making money, right? And again, as simple as it seems, again, another high low, we can take another buy. We're making money. Where it gets tough, right, is when we flip this and we have something which we call a bearish trend or a downtrend. and you could probably guess what happens in a downtrend, right?
All right, hold on.
So
Let's throw the mic out. What do you guys think a downtrend looks like?
Lower lows and lower highs.
Perfect.
yes,
Perfect.
on the money.
It's that
So what does
easy.
that look like? Something like this. And what's happening here, right? Like Lewis said, we're putting in lower highs and we're putting in lower lows. And the more you see this happen, the more you get used to it, right? And why? So now it goes back to here. Like it seems really simple to take buys here, but now that you know what a downtrend could look like, all of these lows could be the start of a downtrend, right? And this is where technicals and things like that come into play. So market structure is the first thing you want to look at. You know, you want to determine, are we consolidating? So is price bouncing in a range? Or are we in an uptrend? So is price putting in higher highs, higher lows, higher highs, higher lows? Or is price alternatively in a downtrend, making lower highs and lower lows? And that will give us our first kind of bias. And by bias, I mean when we see price making, so let's say we're in a bearish downtrend. So let's say we see price making lower highs and lower lows. We wouldn't want to take buys, right? Because like Nathan said before, you want to swim with the flow of water. Like you swim against it, you're going to gas yourself out. Meaning, if we think that we're going to predict the bottom here and take a buy, what's going to happen is we're going to get stopped out. We're going to lose money. And then what's going to happen? We're going to be like, nah, the buys are still on. We're going to take another buy. And what's going to happen to that buy is we're going to get stopped out again. Right? So trading with the trend is the easiest and almost the number one rule.
Just remember,
Right?
trend is your friend.
Trend is your friend.
It will, it will save your bank account essentially. Trade with the trend, not against it. But that's if you're gonna get one thing from today, it's that. Trend is your friend. Trade with the trend. Like,
And also remember, like, because we have our different time frames, right? We could on a big time frame, so let's say on a 4-hour time frame, we could be in a downtrend, right? But in that 4-hour time frame, if we can see that we're at a lower low, so we can see we're somewhere here on the 4-hour time frame, what we could do is we could drop down to a smaller time frame and look at where price is going to retrace back to and take that buy. It is riskier because you always want to trade with the trend, but in this instance here, this could be over like on a 4-hour basis, this could be over a couple days, right? And we're not going to sit idle for a couple days. On a smaller time frame, we're going to see this as an uptrend. So that's
that
when your time of your candlestick time frames come into play.
That is when things get confusing in regards to trend as well. So like
Yeah.
it I feel like it will all start clicking within the next week. Especially, yeah, if you guys kind of stick to it, do a little bit more research, keep asking questions and stuff like that as well. Yeah, we're more than happy to help, honestly. We want to see you
Yeah,
guys
exactly.
success at this just as much as us, kind of thing. So, like, yeah, honestly, pick our brains for shit. The more you're kind of involved with the charts, the more it's gonna start making a bit of sense. But next week we'll start actually doing a bit of technicals and running you through how to make positions and how to understand what's going on within the markets. Honestly, next week you'll probably have a bit of an idea on actually how to place some trades and stuff like that. And then from there, we'll
Yeah.
start getting a bit more advanced shit going as well, like some ICT concepts and smart money concepts and supply and demand and yeah, fun shit.
Yeah. It will all come together, but today was really just about you guys need to know what it is you're trading, number one. Number two, candlesticks are very important. Candlesticks is almost half the game. in the sense that you know, all of this other bullshit is added confluence, but candlesticks is what's actually happening with price, right? So yes, you can draw lines, but candlesticks is what's actually printing. So what price is actually happening. So it's really important to one, understand what candlesticks are doing, and two, to be able to apply it to something like this. And to go into just to touch on liquidity again, so that's kind of why we see trends like this happen, right? I kind of touched on it before, but when price makes like this high, it needs something to fuel it. Think of it as like a rocket ship. Like it can't just keep going up with no fuel, right? So what will it do? It will come back down and it will test something. It will test a low. It will test a support or resistance, is like what we would call it, right? And then what do you know? It's fueled up for another push up. So you kind of want to look at the in a bullish trend, the higher lows as your liquidity pools. So this is where price came down to grab liquidity to push back up. And inversely, on the other side, for a bearish trend, when we're putting in lower lows, so this is the move, right? In a bearish trend. And what's happening here is we're coming back up to grab liquidity before what do we do again? We push all the way back down. And this kind of goes hand in hand with, I know Nathan loves to talk about it, but the market is always trying to go back to equilibrium. So it's trying to find a state where it's never going to be one-sided. Like it wants to gravitate to equilibrium in a sense.
So yeah, like I was reading a book just on this. Like this will be the last point, and then you guys can have your nights free. But like, you got to imagine something like a pendulum swing, but then kind of fucking turn it around and turn it sideways. You're essentially, as it's swinging, you've got the middle point, the center point. With trading, essentially the market wants to be in a center point constantly, but obviously it can't. It's too hard. And it's a battle between buyers and sellers to where the price actually should be. So essentially, you can get indicators that will be your moving averages, and then obviously it's going to be going between those 2 points. But yeah, it wants to be sitting. It wants to be sitting at equilibrium always. So if you kind of like think of it in that kind of way, so it's kind of sitting at the average throughout that whole process of the ups and downs, then you just know that it has to come down for it to keep going up, and vice versa, it has to come up for it to keep going down. So yeah, the market's it's almost a living, breathing organism. But yeah, you learn small things about how it operates and how it likes to fuck people the next few weeks. I'm excited for you guys. It's going to be fun. I think that's it for the night, to be honest.
Yeah, I think that's a lot for you guys to kind of take in.
Throwing a bit of shit at you guys, but
Yeah.
I'm honestly keen to see what you guys do, to be honest. It's going to be good fun. Bit of an adventure altogether.
Sweet.
What are your thoughts? Like,
Yeah.
you guys got any questions and stuff like that?
I did have one question. Just like I noticed you guys said the word. I don't even know what it means, but confluence.
Confluence?
What is a confluence? Yeah.
So essentially, when you're looking at your charts, you want as many things that are giving you the thumbs up as possible.
Yeah.
As a
Confluence
client.
like reasonings.
Yeah.
So it's like
Yeah.
So maybe your price gets to 1 point at one confluence, and then on the 4 hour, it's gone bullish, or it's turned to a buy signal. That's another confluence. Maybe it's operating above a moving average. That would be another confluence. So it's essentially giving you as much things to give you that, okay, all right, this is a good position. Maybe it's wick down. It's another confluence, so it's not going to go into that area. It shouldn't. So yeah, you essentially want to wait for as many green lights as possible before you kind of get in, and you'll start getting more and more as you go along. But yeah, the confluences are just little ticks along the way that will kind of get you going.
Yeah.
If that makes sense.
Yeah.
Easy, my brother.
So we'll be here tomorrow trading. So we usually try to trade late London session to New York. So if you guys are on your computers or whatever and you see us in the Discord, feel free to jump in. We can go over whatever you like, and then Thursday will be dedicated to another session. So we'll kind of dive deeper into what we've already learned today and just add on to it. So I think on Thursday we'll kind of talk about actually buying and selling and maybe like position sizes,
Yeah, and
accounts.
maybe even how you make money trading forex and the actual gains that you can make with doing this as well.
Yeah.
I think that wouldn't be a bad idea.
Yep.
Sweet.
And yeah, just feel free to use us whenever, guys.
No, honestly, we're here to help get you guys as up to speed as possible. It'd be good fun, and then we start trading together after the 5 weeks.
Yeah, that's when the real fun begins.
Yeah. Did you?
The feeling you guys will get when you make your first like bit of money through this is
Even
gonna
just
be different.
your first win, man. First win, first loss. All right. Well, yeah, that's it for me. Unless you guys have anything else you wanna add.
Yeah, just thanks guys for letting us pick your brains.
No, no dramas at all.
Appreciate it, guys.
Yeah.
Is this your first like course you ever taught, or like first like lesson you've done?
Yeah.
Yeah.
Well, actually, Nathan kind of taught me.
Yeah.
So I guess this is not Nathan's first rodeo.
Yeah, like back in
No, you
Adelaide.
guys did a good job. You did it. Yeah.
Nah,
No, you guys did a good job. You explained it pretty well.
Yeah, we do want to say it's very unstructured, and we kind of wanted it to be like that because we want you guys to just tell us and just like scream at us to explain things, if that makes sense. Like, this is kind of going to be the first run at it, so then we can understand from a perspective of someone that doesn't know much, you know, where they need more time to be spent and whatnot.
Yeah, as well as like our own explanation whether or not it's shit or it's good, and like how we can better ourselves as well.
Yeah, just be 100 with us, and we'll be 100 with you. Tell us we're being shit cunts if we're being shit cunts. But it's sick.
Yeah.
It's exciting, and yeah.
Yeah, I think you guys enjoy it. To be honest, it's a very enjoyable kind of game, and once you master it, you can honestly do it from anywhere in the world. It's kind of why I wanted to do it, because I live in fucking Thailand for a few months.
Alright.
Friends. Lots of love.
Thanks, guys.
No dramas at all.
Thanks, guys.
Wait. Are these recorded?
Yeah. I've just recorded this one, but yeah, we gotta work on that as well. I feel like that. Yeah. It's recorded. So
How do we watch it again?
I'll upload it to
We'll
YouTube,
post it on YouTube.
and then we'll put a link in the chat.
We'll link it in the. Yeah. So do you see on top of the voice channel? There's a links. It says links
The what?
on top of the voice channel.
Wait, where is
can
it?
you guys see my Discord? You can, right?
Yeah.
So if you go into links, we'll start to put some like important links here of just one, the recordings, and then two, any like just important docs or anything. Even if you guys find anything interesting that you want to share with everyone else, just chuck it down here.
Mm.
And then we have our chat room, which is this one. So this is where we can just talk shit, pretty much.
That one's private as well, so that's private to everyone that's in this in this group.
in this course.
Yeah.
And then on every other day, so we'll only be in this voice channel on Tuesdays, Thursdays, and then Monday, Wednesday, Friday. If you scroll down, we'll be in this one here, in this voice chat. So you can just jump in there if you see us there. And then we also post all of our trades in this trades channel. So if you want to just have a look at the trades we're taking, it will be like a little bit difficult at first to understand what's going on, because like what is going on. But it will make more sense as you go.
All right.
But
Any more
sweet.
questions, guys? All good. Good shit.
Yeah, good.
Yeah, no,
Easy.
that's cool. As.
Alright, guys, have a good night. We'll see you guys
Thanks.
Thursday.
Yeah, we'll chat again soon.
Yeah.
Sweet. See you.
Bye.
That's
See you
all.
guys.
Thanks so much.
No dramas at all.
Bye.
Ciao.
Ciao.
How do
Yo.
Oi, what's going on?
It was good. There wasn't many people, but I kinda like that more.
Yeah, it was a bit nicer, to be honest.
Yeah, I do like that a lot.
I
This
think-
I feel like we can really fucking like imagine if we had like 10 people, bro. How hard would it be to track and do questions and all that?
Focus on these people as well. I feel like with this group that we've got as well, this is really going to test us to see actually if we can make these people profitable. And it's good that we got such a small sample size for it, rather than fucking 15 people and we're just like, fuck, what are we doing?
Yeah, exactly.
Yeah, I think that was
Exactly.
good, man. Like honestly, and we're bouncing off each other pretty nicely. Fucking
Yeah, the only thing is we just go on tangents, but
yeah,
I mean,
that's what I was thinking. I was like, fuck, we're a little bit unstructured because we're just. That's why I was
yeah.
like, does it make sense, guys? Can you just let us know? And they're like, yeah, it makes sense. I'm like, are you sure?
Yeah, but the thing is, like, the tangents that we go on are always going to be along the same lines, which is good because then we're just reinstating it to them.
Yeah.
Like the whole psychology side of things, or like all of that.
Yeah, and it's good because we bounce off each other with those ideas as well, type of shit. Like it's not
Yeah,
just like. I like it, man.
exactly.
I do like it. It's nice. It's a
It's
good start.
nice. It's
Good start.
feels good, right?
Yeah, and I think Uvesh and like my cousin was in there, but my cousin trades crypto, so he's kind of like I think he was just listening, but he's like, fucking, I think he thinks that we were trading, but then
Yeah.
it would just be like I'll message him and I'll be like, oh, we're going to jump in tomorrow. We're going to start trying to trade an hour a day just in the Discord if you want to join and start building the Discord that way as well.
Yeah, and I reckon we can get Christos back in. I know Jack will join when he's free.
Yeah.
I'll follow up with Eric because he was really keen. And then I know Vip had to stay back at work today, so he couldn't join. But he
No.
wanted us to make sure we're recording it. But
Yeah.
no, it's good, bro. And
I'm pretty happy with it, to be